Good morning. This is Japanese Economic Review Channel. Let's look back at the historic session on Wednesday, March 18th. The Tokyo market witnessed a massive surge as geopolitical tensions in the Middle East eased dramatically. This sparked a powerful risk-on rally, propelling the Nikkei 225 back above the crucial 55,000 yen threshold for the first time in a week. It was a day defined by a global sense of relief. Reviewing the closing figures from yesterday, the Nikkei 225 soared by 1,539 yen to finish at 55,239. The Topix followed suit, climbing 90 points to 3,717. Despite a slight strengthening of the yen to the 158 range, the market remained resilient, supported by strong U.S. index futures throughout the afternoon. Total trading value on the prime market reached a staggering 6.68 trillion yen. The rally was triggered by comments from U.S. NEC Chair Hassett regarding tankers resuming transit through the Strait of Hormuz. This news instantly cooled supply chain anxieties, leading to a tech-heavy gain on Wall Street on the 17th. By yesterday morning, this momentum hit Tokyo, triggering aggressive short covering and buybacks that pushed the market higher from the opening bell. Yesterday's momentum was driven by strong tailwinds, including U.S. tech strength in firms like Western Digital and ARM Holdings. However, late-day buying was somewhat tempered by the looming FOMC announcement and sticky oil prices. Investors balanced the euphoria of easing tensions with a wait-and-see approach ahead of critical macroeconomic policy updates from the U.S. Federal Reserve. One of the most significant aspects of yesterday's session was its breadth. This wasn't just a tech bubble, it was a systemic recovery. Over 90% of prime market stocks advanced, with 1,499 gainers compared to only 76 decliners. This broad participation signals foundational confidence across the Japanese corporate sector, suggesting a reevaluation of value beyond just mega-cap names. The sea of green was absolute, as all 33 industry sectors ended higher yesterday. Leading the charge were high-beta sectors like shipping, NYK, K-Line, and energy, ENEOS, Idemitsu. We also saw robust gains in wholesale trade and securities. This sector-wide advance illustrates a holistic market recovery that touched every corner of the Japanese economy. The growth market also saw a sharp rebound yesterday, with the 250 index surging as risk appetite returned. Space venture stocks were particularly popular, with names like Synspective, Astroscale, and QPS Holdings seeing high momentum. While most core growth pillars attracted capital, some localized friction remained in sectors like real estate tech, specifically GA Technologies. Finally, yesterday brought several key corporate announcements. Ito En and Kirin initiated a production alliance, while Kurita Water announced its expansion into Mexico. On the tech front, Tokyo Metro began deploying IP radio terminals, and Yokogawa Bridge developed a new anti-degradation sheet. These moves highlight a persistent focus on efficiency, DX, and global expansion even amidst macro volatility. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.